and IPOs in fact have become a national pastime. So one of the key facts from the SEBI study is that about half of investors in IPOs, individual investors, sell off their IPO allotments within 1 week.
Disclaimer, not legal advice.
Yeah, it's not. Yeah. So try to avoid this. One thing to do is that if you have the money applying through the big HNI category, so even buying a single share in the parent company gets you into the shareholders quota. It's not probably the smartest thing to do tax wise, but that is another jugaad that
The reality.
That's the reality of India. Welcome to Moneynomics with Mint. This is Neil Borate. I am the personal finance editor at Mint. And today we have my colleague Sachin with us, who's done an excellent story on IPOs. And IPOs, in fact, have become a national pastime. We say this because of the crazy amount of numbers of people who invested in IPOs. Bajaj Housing Finance alone got 58 lakh applications in just the retail category. And there's a SEBI study which gives some very interesting facts about IPO investing and IPO flipping. So one of the key facts from the SEBI study is that about half of investors in IPOs, individual investors, sell off their IPO allotments within 1 week. Like they're just flipping. They're not investing for the long term. And it's actually become rational to do this because in a raging bull market, something like 75%, in fact, exactly 75% of the IPOs that SEBI looked at in its study from April 21 to December 23, it looked at 144 IPOs and 75% of them delivered positive returns. So it paid off big time for a lot of IPO investors. There were some laggards, but we haven't really seen any great spectacular IPO debacle. And that usually marks the turning point of a very big bull market. So therefore, here we are with IPO flipping as a national pastime, national sport. I want to caveat this discussion by saying that we will discuss how to max out chances of getting an IPO allotment, but we are not saying you should invest in IPOs. We're not recommending any specific IPOs. At Mint, we believe in old-fashioned, old and boring mutual fund buy and hold investing. But a lot of people are interested in it. So we're going to discuss how you can max out. A second caveat is that a lot of splash is made in IPOs that do well. What happens generally when an IPO does well is that a lot of people apply for it and the allotment you get is small. Like the actually amount that you get in the demat account is small. So your gains tend to be quite small. Whereas if it's a dud IPO, actually you'll get more allotment because fewer people will apply. That's one issue. The other issue is that people who get dud IPOs, they tend to not sell those shares. So they just sit in the demat account and slowly wither away and lose steam and compound losses. Whereas the blockbuster IPOs, they are sold off immediately. So actually it's not a winning proposition for most people. I'm sure there are smart folks out there who can pick the right IPOs and who do make a ton of money. But for the average investor, it's not really a winning proposition. But that said, it's good fun for people who do follow this with a very small part of their portfolios. So, Sachin, let's talk about the first relevant question here. What are the different categories of IPO investors?
Thanks, Neil, and thanks for having me in this episode. Now, Neil, there are three categories if you want to apply for an IPO issue. Now, let's club it in very colloquial language first. So, if you are not a very big investor who wants to invest less than 2 lakh, then you would have to apply through the retail category. There is the HNI category, and the HNI category is subdivided into two parts. Now, if you apply from somewhere between 2 lakh to 10 lakh, you would fall under the small HNI category. The next category is called big HNI. Here, the sky is the limit. You can apply from anywhere between 10 lakh to God knows how
much money you have.
Yeah.
So just to sum it up, it's 0 to 2 lakhs, which is retail, 2 to 10 lakhs, which is small HNI, and above 10 lakhs, which is big HNI.
Now, Neil, I just want to add a caveat there. Now, if you win an allotment in the retail category, you are entitled to only about, let's say 15,000 worth of shares as allotment.
Rupees 15,000
Rupees
worth. Yeah.
15,000.
Yeah.
Now, the amount goes higher if you win an allotment in the small or the big HNI category.
Just to explain this further, basically there is this concept of lots in stock investing. In case of retail investors, it is just one lot
Yes.
that you're bidding for, whereas in case of HNI, it's 14 lots, 1/4 that.
Yeah, so
that you're-
lot size can vary
Okay.
according to the number of
Okay.
shares, but the thing to
It's
note
more
is,
lots in
Yeah.
case of HNI.
it will be around 2 lakh in the HNI category, whereas for the retail it will be about 15,000.
15,000 rupees. Now, let's get to the number of it. If you have the money, which category should you invest in to maximize your chances of getting allotment?
So this is the tricky part. So there is no golden rule as to you should apply in this category, then you would maximize your chances of getting a lot or something like that. It's a lottery based system, and you have to look at each and every issue before, and you have to make an informed judgment by reading the document. But here is what we have. In the retail category, we can safely assume that if the issue is very popular, lot of people would be applying for that issue, right?
Yeah.
So the chances of getting in a good IPO can be very less.
Yes.
Now, even if you get the allotment, you will get only, let's say, 15,000 worth of shares, which might not be, which the people with lots of
It's
money
not going
might
to move the
be-
needle. Yeah.
Yeah. If you have more money, then the actual thing to consider is the small HNI or the big HNI category, where if you get the allotment, you would get an allotment of rupees 2 lakh. This is a roundabout figure. But now the thing to note is whether to choose the small HNI or the big HNI category. This is slightly complicated. Neil, we were discussing also. The exchange number shows a particular number as the amount of subscription, but in reality that might not be the case. So here we have to look at how the lottery system works. Do you have any thoughts on this?
Yeah. So as we were discussing earlier session, people usually read in newspapers the extent of oversubscription. So let's say that 100 crore IPO has got bids worth 10,000 crores. It looks terrifying, and people are like, "What's the point? I'm not going to get any allotment." But the reality of the math behind it is that it depends on number of investors who applied, not the extent of oversubscription. So I think, as we were discussing earlier, it makes sense to apply in big HNI because logically there will be fewer number of people who have applied in that category. Fewer people have more than 10 lakh rupees to put into a single IPO, and therefore your chances, the sheer probability of getting an allotment in the first place, those go up.
Yes. So Neil, as you mentioned, the lottery is it doesn't matter how much money you apply for. If you fall in the HNI category, whether small HNI or big HNI category,
It doesn't matter if you applied for shares worth of 20 lakhs, 50 lakhs or 5 crores, because you will still be in the same big HNI category. And that lottery is according to number of investors, it's not influenced by the size of your application. Go ahead, Sachin.
Now, Neil, let's take an example because this is a very tricky method and even we got confused the first time we saw. So we have compiled some numbers and we'll try to explain this as simply as possible. So Neil, let's say for the HNI category, and there is 15 crore reserve for the HNI category, and under this category, let's say rupees 10 crore they have earmarked for the big HNI category and the remaining 5 crore for the small HNI category. Let's also make an assumption that 1000 investors are applying in each category. Now let's look at the big HNI category. Let's say 1000 people come and they say we want to contribute, we want to apply for 1 crore each. Now we have discussed that the maximum size they could allot was 10 crore, right? But the subscription
For the category as a whole, for big HNI as a
for
whole.
big
Yeah.
HNI category as a whole. But the big HNI category subscription amount became 1000 crore, right? Because
Yeah.
1000 people came with 1000 crore in their bank accounts which wanted to apply.
Yeah.
Now the subscription amount will show 100x over subscription if you compare 10 crore
Yes.
and 1000 crore, right?
Yes.
Now let's go to the small HNI categories. We have discussed that there is a quota of 5 crore in that category. let's assume 1,000 people came and applied in this small HNI category with a amount of 9 lakh rupees. 9 lakh into 1,000 investors equals to 90 crore. Now, if you divide 90 by 5 crore, then the oversubscription amount is merely 18 times.
Yes.
So now, Neil, you see the trick here, right?
Yeah. So logically speaking, your chances should be higher in small HNI because it's just 18 times oversubscription compared to 1,000 times oversubscription for big HNI. But that's not how it actually works. So Sachin, now tell us how it actually works.
Yes. So Neil, I'll tell you how it exactly works. So let's say whoever wins the lottery will get 2 lakh of allotments, as we have discussed, right? Now there is a demand of 1,000 crore, but the actual amount that the company can give out is 10 crore. That means the company can give 2 lakh each to 500 investors.
Yeah.
Which makes it a 1 in a 2 probability of getting the share.
Yeah, 1:2, 50% chance.
50%
in
chance
the
of
big HNI category.
Yeah, big HNI category. Now, if you go to the retail category, if you are allowed to give 2 lakh to each investor, and if the maximum amount you can give to the whole of the category is 5 crore, that makes it a 250. You can give 2 lakh worth of allotment only to 250 applicants. So if you look at it, 250 divided by 1,000, it becomes 1 in a 4 chance of getting the allotment.
Yes, 1:4 or 25%. So actually, it's in this case, it's the other way around. Your chances are higher in big HNI. And in case the math and the numbers seem very complicated to you, let me just break it down very simply. You have 1,000 people in both categories, but in case of one category, the quota is more. It's 10 crores for big HNI. In the other category, small HNI, the quota is smaller. It's 5 crores. So 1,000 people are competing for a bigger pie in big HNI, a smaller pie in small HNI, and therefore the big HNI category people have a higher chance of getting allotment. So it all ultimately boils down to the number of applicants, not to the size of the application.
Size of the applicant. Now, Neil, interestingly, in the Bajaj Housing Finance IPO that was recently a blockbuster IPO, 3 people applied for 50 crore. Now, I mean, that doesn't mean they are entitled for a subscription because it's on a lottery basis. Sadly, none of them got even a single allotment. And people who applied for 10 lakh, 20 lakh, they were the lucky ones. So that is how it works.
Yeah. Incidentally, have you ever applied for an IPO session?
No, Neil. I think whenever my salary increases, I would definitely, give it a try.
So I have applied for IPOs in the past, and before the current mega boom, post-pandemic boom, and therefore I have experienced the reality of dud IPOs as well. And what people are seeing now is really not a balanced picture. It's like the SEBI numbers show 3 out of 4 IPOs are doing positive, but you never know when this market will turn. Okay, now let's talk about 2 related points. So one is gray market premium. A lot of people look at this a lot and they decide if they want to apply basis this. The gray market is an unofficial market where unlisted shares are being traded. Whatever information comes out of there is not transparent. It's not like a typical stock price quote. So you can't really give too much importance to it. The other thing that we are going to talk about is the 2 quotas that some companies give. One is the shareholders quota and the other is the employees quota. So let's first talk about the shareholders quota. How does that work?
Yes, Neil. So some companies come up with a special quota. Their aim is, if you own a share in my parent company, let's say in the case of Ather, right, which is the electric two-wheelers scooter makers. So one of their parent promoter is the Hero Motocorp company. So they are like, if you own a share in the Hero Motocorp company, will give you a chance to get some kind of allotment in the
shareholders quota.
Yeah, so they keep a separate quota. This much amount we are keeping it aside for shareholders category. Now the interesting thing to note is that there is a particular date. Before that, you have to have those shares in your demat account to be eligible to apply for this IPO.
Yes.
For this category. Another interesting thing is that for one demat account, you can only apply in one of the categories. You can submit one application,
So you
right?
can't do shareholders quota and retail quota and big HNI. You
No,
gotta
you
select one.
no, you can. So shareholders quota is interesting because you can do shareholders along with any other
Ah,
category,
okay.
but you cannot do retail plus
Big HNI.
plus big
Yeah.
HNI or apply in two retail through different accounts.
Yes. Yes.
That you can't do.
Yes. So even buying a single share in the parent company gets you into the shareholders quota,
Yes.
and that increases your chances of getting allotment.
Yes.
Some companies have employees
Employee
quota as
quota
well.
also. Yes.
Um,
Yes. So here's how the back end works. And if you are a employee of the company or any related subsidiary company, they might have some kind of quota for employees also. But in reality, what happens is a lot of people just click on that category and apply. But when it goes to the RTAs after after the IPO process is happening, they will check using your pen. Do you really work in this company? Lot of the employee quota will get
Yeah.
rejected. So the number you would see, it would drastically come down.
yeah.
In the
So,
Bajaj
yeah.
IPO, the number was something different, and they had to adjust it with some other category because it got undersubscribed in the
Yeah.
employers
Yeah.
quota.
Probably should apply and then apply for a job very quickly.
Yeah.
So, Sachin, another issue that comes up in IPO investing is the failure of UPI. There are two ways of applying for IPOs, right? One is net banking, and the other is UPI. UPI is getting more and more popular. It's really convenient, but there is a very high failure rate.
Yeah, this is a very everyone is playing the blame game here, so we don't really know for sure where the actual failure happen. But there is definitely one issue with the UPI mode of payment. See, the obvious advantage of using a UPI to do this allotment is that it's very easy. You just open your account. It's like paying through Google Pay, right? You just fill up your enter your code, and then it's boom, it's done. Whereas in the net banking, you have to go through the net banking, fill in your demat details, so the process is slightly longer. But many people in the Bajaj housing finance IPO complain that they never receive the mandate, which they have to approve to
To block the
to
money.
block the money. One reason everyone is talking about, and I was talking to some of the guys from Zerodha, their point was they have routed the payments, the mandate received from investor to the company, to the investment banker managing the issue, right? And they also have a bank which is responsible for maintaining all the mandates and making sure they get the money once once the mandate comes. The problem happens when lot of people apply.
Yeah.
Think of it like a queue, right? Like 58 lakh people just in the shareholder category
It
apply.
basically crashes the system.
Crashes, yeah.
Yeah. Okay, let's talk about another jugaad for increasing your IPO allotment, which is applying through multiple PANs. The reality of India, a lot of people do it. We took some examples in our story where somebody had applied for through 14 PANs, or was it 18 PANs?
18 PANs.
18 PANs, 1/8. It's insane. Basically, you have to have that many friends and family, but it gets tricky with friends, with unrelated members, because essentially it's your money, right? You're routing your money through other people, and because you can't have multiple PANs on your own name, that's illegal, that's not allowed. What people do is they route the money through their friends and family, but it can lead to a tax complication, because if you gift somebody more than 50,000 rupees and you're not related to them, and by relation I'll just come to that in a minute, because it's only defined relations who are exempt, but if you're not related to them, then they have to pay tax on that gift, on that 50,000 k upar that amount. So that can more than negate the gains that they make in the IPO, and therefore net you actually might be in the loss and they'll be in the loss. Now who in the family can you gift money to? Usually it is parent child. So if you have parents, you can route it through them, or children, you can route it through them. Again, it's not a kosher practice, don't do it, it's not worth it. But people who want that additional edge, probably this is the only less tax hassle way of doing it than using friends.
Yes, disclaimer, not legal advice.
Yeah, it's not. Yeah, yeah. So not try to avoid this if you can.
So Neil, I just wanted to know. I have a cousin who I'm very close to. I want to give them some money and make them apply for an IPO through their account. Now I know for sure कि he or she will not cheat me because they are part of the family. But what about the tax impact? How much tax do I have to pay?
Yeah, yeah. So Sachin, cousins are not exempt from tax. Immediate siblings are, but in this case, they'd have to pay tax. Now, another related area to IPO investing is SME IPOs, and that's made a lot of headlines. It's crazy the kind of numbers we see there. Companies which are offering 100 crore worth of shares, getting 100x that amount, that kind of craziness. And a lot of people don't understand that the reason is that in SME IPOs, what is called proportionate allotment actually does work. So, if you apply for more shares, your chances of getting more shares does go up. It's not like the main board IPOs where it is as per the number of applicants that there's a lottery. Here, it actually matters how much you apply for, and so people go out like crazy and apply for a lot. That said, I mean, this is the riskiest segment of the market. So a lot of it is manipulated. There are ways in which promoters and other people pump up the value of these shares. So, and more importantly, SEBI is not vetting these applications. The exchanges who are vetting the SME IPO application. So, a lot of stuff gets through into SME IPO, which doesn't get into the main board. There was one IPO that got pulled recently, right? So just be super careful with SME IPOs. So one other way of investing in IPOs is through mutual funds. Now, generally, mutual funds invest just a small part of their portfolios into IPOs. They sometimes act as anchor investors. Sometimes they get criticized for acting as anchor investors for some of the more controversial IPOs. There's only one dedicated fund which takes IPO investing as its core theme, which is the Edelweiss recently listed stocks fund.
Yes.
And it does both recently listed stocks and IPOs itself as part of its strategy. How is that fund done, Sachin?
Yes, Neil. So for our readers, let's look at the actual performance. So in the last 5 years, the fund has given a return of 21% CAGR. In the same time frame, the benchmark has given a 12% return. The benchmark is the India Recent 100 IPO Index, which tracks the 100 recently listed IPOs. In the same time frame, Nifty 50 benchmark index has given about 15%. But Neil, the important thing to note is that there has been a lot of action in the IPO market, and SEBI paper has also said that there is a huge probability of making listing day gains. So when there is a lot of euphoria, when there's a lot of action in the markets, I guess this kind of funds would perform well, because we should remember that these are fund managers managing whether, deciding whether they should invest in a particular which IPO to choose.
Yeah. So as far as I'm concerned, it sounds more sensible than doing it yourself. Nobody actually goes through the DRHPs and analyzes. Most people make decisions based on what their friends or WhatsApp groups are saying or what they hear on a YouTube video or TV. So it's more scientific than doing it sort of yourself, DIY. But at the same time, they are also probably capitalizing on this run up into this bull market. We don't know what's going to happen in the long term. In general, we don't like thematic funds. We prefer diversified funds that are able to sustain across different market cycles. I'm just going to conclude with a few thoughts about IPO investing. Again, to remind you guys that we are in a massive bull market and IPOs tend to do well in a massive bull market. And a lot of us have parents who have memories of the early 1990s, which was another bull market, the Harshad Mehta one. That time also getting an IPO allotment was a great thing. People made a ton of money. And some people have parents who have even further back memories. So there was something called the controller of capital issues before the current system of book building came into place. And that was a government body that used to set the price as well.
Yes.
And so at that point, getting an allotment was actually a lottery. Like, it was really hard, and people who got an allotment made huge amounts of money. A lot of these folks hung on to their shares since then. So you will have stories in families that hey, I got Infosys shares, or I got HUL shares, or I got XYZ shares at IPO. And that was a function of those times. Now it's a lot more competitive. The It's still hard to get allotment, but that's for different reasons, because there's a frenzy in the market. There's this whole concept of control of capital issue no longer exists. So with that note of caution, if you still want to maximize your chances of getting an IPO allotment, we've outlined a couple of ways to do it. So just to sum it up, one thing to do is that if you have the money, applying through the big HNI category can possibly increase your chances, because as we discussed, there are just fewer people who have that much money. So there are fewer people to compete with you in that category. If you are already a shareholder in a company which is doing an IPO and has a shareholders quota, then again you get another separate quota to increase your chances. If you're an employee, great, another way to increase your chances. I think there are some folks who try to use multiple pans. It's not probably the smartest thing to do tax wise, but that is another jugaad that
The reality.
that's the reality of India. So these are the ways that you can at least increase your chances of an IPO allotment. Thank you very much, Sachin.
Thanks, Neil. Yeah, it was a fun
Yeah.
chat. Yeah.
All right.